Hello and welcome to the day ahead. It is Monday, June the 27th. I'm Andrew Gagan. Well, to the markets, and Wall Street surged in trade on Friday, led by gains in basic materials, technology and industrials, as investor worry eased over aggressive Fed rate hikes. The Dow closing more than 2% higher, while the S&P and Nasdaq climbed more than 3%. Stocks, specifically Royal Caribbean Cruises and Norwegian Cruise, were among the top performers there on the S&P, climbing more than 15%. Royal Caribbean launching the Odyssey of the Sea during the pandemic, as well as the newly built Coco Cay Island, proving to be smart investments for the company as holidaymakers cruise through the US summer. Elsewhere, Salesforce, Goldman Sachs and Boeing all posted strong gains, while some of the worst performers, including Verizon and Citrix Systems. Well, as Europe's largest war since World War II enters its fifth month, G7 leaders have gathered for a summit, just as unity in support of Ukraine is being tested amid soaring inflation and energy shortages. US President Joe Biden told allies, including Prime Minister Anthony Albanese, that we have to stay together against Russia. Britain, the US, Japan and Canada agreed to ban new Russian gold imports to tighten the sanctions on Moscow and cut off its means of financing the war. Russian gold exports were worth $15.5 billion last year. To the data, and US new home sales in May were well above forecasts, with buyers reportedly locking in mortgage rates. And the University of Michigan consumer sentiment fell to a record low of 50 in June. And inflation expectations for the year ahead were at 5.3%. Meanwhile, Fed member Mary Daly saying she thinks a 75 basis point hike is needed next month to get monetary policy to neutral as quickly as possible, which she sees at 3.1%. And fellow Fed member James Bullard saying front-loading rate hikes is a good idea, as he's not yet seeing signs of a pullback in household consumption. On bond markets, US Treasury, the 2-year there, yields rising slightly to 3.06, while the 10-year yield rose to 3.13, with markets pricing in the Fed funds rate to be 69 basis points higher at its July meeting. The US dollar slipped against most majors, with the Aussie rising to 69.1. Let's take a look at what's on the overseas data docket this week. And tonight, US durable goods data will drop. Wednesday, consumer confidence and GDP growth. Thursday, US core PCE index will be released along with China's manufacturing PMI. Turning to today's market, when we open this Monday, is expected to run with Friday's global rally. ASX futures currently up close to 1.6%. Global oil prices rebounded on Friday. Brent crude up close to 3% as unrest in Libya disrupts its oil exports. And fears over global economic growth continue to weigh on metals prices. Iron ore futures were slightly weaker, while base metal prices also fell, with tin down more than 8%, having lost 20% for the past week. Gold futures were slightly firmer. And in the crypto space, prices have been relatively steady over the weekend, with Bitcoin holding above 21,000 US dollars. As we round out the financials this week for this financial year, on the macro front, the increasingly important weekly consumer confidence index. Wednesday is the retail trade read, which is expected to fall as consumers become increasingly cautious of their spending. Strong hiring activity will be reflected in the job vacancy read also on Wednesday. And finally on Friday, CoreLogic's home value index is released, with house prices anticipated to have fallen slightly. And S&P Global releases its Australian Manufacturing Purchasing Managers Index for the month. That is your day ahead. We'll see you again tomorrow.